Good evening, and welcome to this week's special presentation entitled A Goldmine of Information. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and it's my pleasure to give your presentation this evening. The VectorVest system is designed to help you to make better decisions in the stock market. We're going to teach you how to have a trading plan of knowing when to buy, knowing what to buy, and knowing when to sell. If you follow your plan, you plan your trades and trade your plans, you're going to always find yourself on the right side of making money in the market. This week, we're going to go back to an essay written by our founder, Dr. Bart DeLito. The essay was written on Friday, November 10th of 2006, and it was entitled, How I Use the Stock Viewer. Now, as he started putting this together, he said, VectorVest is designed to conduct a factual, objective analysis of stock data and transform it into information and guidance. And I think that is so important. You are all privy to a bunch of data, but VectorVest does take that data and put it into useful information. All of this information and guidance is stored in the stock viewer. The stock viewer is a gold mine, and our job is to find the gold contained therein and extract it. So this week is a pretty simple, direct, special presentation. We're going to spend all of our time in the stock viewer. For those of you who are new to the VectorVest software, this is a great place for you to start looking for stocks to invest in. Now, if you've already been a subscriber for a while, you have your trading plan in place, some of these tactics that you can use for finding stocks may bode well for you as well. Now, he starts off by saying, I simply access the stock viewer and examine the top 20 stocks ranked by VST, which is our value, safety, and timing vector. That combines the combination of relative value, relative safety, and relative timing, and it gives a good presentation of every stock in our database on that basis. And no matter if the stock is a $1 stock or a $100 stock, puts them all on an equal playing field. I look at the graph of each and every one of the top 20 VST stocks every night. And then he talks about, in his essay he wrote on 12/3 of 2004, he described what to look for in a graph, i.e. a nice steady pattern of rising prices. I also like to see smooth and steadily rising EPS patterns. Why? Because you could hardly go wrong buying stocks with steadily rising earnings. Earnings is the engine that drives a stock's price higher. So the beautiful thing about these tactics is that this is a cherry-picking ideal. This is what you look at on the graph to make a decision on your own. You have all of the power in your own fingertips to help you to make money. So let's get into the software. Here's the home page. We're going to go to the Viewers tab. From the Viewers tab, we're at the Viewers home. We are going to spend all of our time today in the gold mine of the stock viewer. Now, for those of you who are new, our stock viewer is an enormous spreadsheet that tracks all of the stocks that we have in the software. Currently, we have 8,359 stocks. We're going to use different sorts. So instead of having to go through each and every stock to try to find what you're looking for, we're going to use some of the sorts that you can only find in VectorVest to help pinpoint what's good for you. When you open up the stock viewer, it will automatically be sorted by our master indicator, VST. That was the first thing, to look at the top 20 stocks in the list to determine what's good, what's not as good as some of the other stocks. Look at the graphs. So what we're going to do, we're looking at the top 20 stocks out of 8,359, sorted by VST. The stock that has the highest VST is at the top of the list, sorted all the way down. I'm going to simply click on Graph All. I'm going to pull up the graph, and there's only a couple of things that I'm going to look at. I'm going to look at the price action over the last year, and I'm also going to look at the earnings per share, because earnings per share is the engine that drives a stock's price higher. So we're looking at the top 20 stocks. REGI, out of all of the stocks, has the best combination of value, safety, and timing. Now, I get this question asked a lot. Is this the best stock in your database? This is the best combination of value, safety, and timing. So I can see the stock's movement. I want to look for smooth graphs going from the bottom left to the top right, and I want to look at the earnings per share. Let's go to the next stock. Wow. ENPH. Enphase is a stock that's been making the news for a long time, but look at the equity curve. Bottom left, top right, not a lot of pullbacks, but there are some. That happens. But look at the steady rise of earnings per share. Let's move on to the next stock. Let's look at Cts Df. Remember, these stocks, I'm looking at the last year. This has only been tracked since early June here. Look at the movement. Look at the earnings per share. Next one, form. Now, remember I told you that this was a cherry-picking methodology? If you don't like what you see in the graph or it's too volatile for you, you can always go to the next graph. But look at the earnings per share. It's really kicked into high gear. Let's take a look at one more. Molina Healthcare, nicely moving bottom left, top right. Look at that earnings per share. So this is going to give you some ideas to help you in the field of what to buy. And you know something? How do you protect yourselves from these pullbacks? That's what stops are for. All right. Notice at the top, the stock has had a buy recommendation for the majority of this 1 year look back period. So that's just a few of the stocks sorted by VST. Let's close that out and let's get back into the slides. Let's talk about the next thing. Now, Dr. DeLito also likes stocks with the best earnings per share patterns. Remember, earnings is the engine that drives the stock's price higher, has high relative safety ratings. Relative safety is an indicator of risk for the stock. Relative safety looks at the consistency and predictability of a company's financial performance. Are these companies with relative safety above 1? Are these companies that meet or exceed their earnings expectations quarter over quarter, year over year? I didn't mention something. Our indicators like VST or relative safety are cast on a scale between 0 and 2. We make it simple. If the indicator is above the value of 1, it's favorable. Below the value of 1 is unfavorable. So the next thing I do is sort by relative safety, or RS, and look at the graphs of the top 20 RS stocks. But in this case, I especially like to look at the all weekly. That takes out a lot of the market noise on these stocks to examine the long-term earnings performance of these great stocks. Earnings per share is the engine that keeps a stock's price going higher and higher. So let's go back to the stock viewer, simply go to the indicator, relative safety. Remember, on that scale between 0 and 2, above 1 is favorable, below 1 is unfavorable. Simply click on it, bingo. We've now sorted over 8,300 stocks by relative safety. At the top of the list, Salesforce, DR Horton, Facebook, Cadence. These are stocks that we all know about, but within VectorVest, without having to go through each and every stock, a simple change of the sort will make a difference. Let's graph these all. And I'm going to go change from end of day. I'm going to go to weekly, all data. So as I look at that, wow, CRM, look at that move, steady move, bottom left, top right. Yes, we are looking at weekly data, and look at the earnings per share. Wow, how quickly was I able to find CRM? Let's go to the next one. Now, DHI, not nearly as smooth, but look at the earnings per share. It got hit back in 2007. Why? We had a housing crisis, didn't we? And this was a stock that got really beaten up, but now look at the rebound on it. Remember, this is a cherry-picking methodology. Let's go to the next one. Facebook started tracking in 2013. Look at that rise in earnings per share, and look at the graph, bottom left, top right. Couple of more. Let's look at CDNS. Again, a stock that got hit back in 2007 to 2009, thereabouts. But look at the rebound. Stock price going up. Look at the earnings per share. Remember, this is a cherry-picking methodology. Wow, Old Dominion. I've got splits on here. I'm going to take those off. Let's concentrate on the stock. Stock, bottom left, top right, rising earnings. Whew. How quickly was I able to pinpoint this? Strictly by setting a sort. All right, let's close that out. Let's go back into the slides. So we've looked at now stocks sorted by VST on that scale of 0 to 2, looking at stocks sorted by relative safety on that scale between 0 and 2. Let's go to the next indicator that Dr. DeLito likes, to find stocks with the smoothest price performance patterns. So we were looking at the graphs to see which stocks were smoother than others. in order to do that right away, how about I'll sort by comfort index, CI. Comfort index is an indicator that looks at a stock's ability to withstand long or lengthy price declines. In layman's terms, these are stocks that go up more than they go down. These are resilient stocks to a down pullback, all right? So in order to look for those, I've relocated CI on my stock viewer screen to between VST and growth. In this way, I know exactly what to expect when I look at a standard graph of the stock. If the CI is high, above 1.5, I'm going to see stocks with smooth rising price performance. I won't look at the stock's graph if the CI is low, which is below 1. These are stocks that are not resilient to price pullbacks, and they are more susceptible to long or lengthy price declines. Now, he will look at those, though, when he is bottom fishing or thinking about shorting a stock. So if you're looking for stocks to short and you haven't determined a search that you like within the software to look at, how about looking at stocks that have a CI below 1? These are stocks that are more susceptible to long or lengthy pullbacks. I especially like to look at graphs of high CI stocks that are less than $10. That's a great way to know how to buy low and sell high. Stocks below 10 with high CIs are stocks that are going to have the propensity to keep moving up in price. All right, let's go back into the software. Now, notice that my CI is here. CI is normally all the way at the end of the table, all the way over here. There's two ways to move it over. One, I can simply highlight it, left click on it, hold it down, and now I'm able to move any column anywhere I want. Or number two, if I right click on any stock, I can go down to layout. From the layout functionality, normally CI again is at the end. I can click on it, use the up arrow to move it exactly to where I want to. Notice that sector is moving up. But if I want to put it back, I use the down arrow to push it back down. So those are two ways to move any of your columns to fit what you want to see as far as a view. I'm going to click on cancel. So I have moved CI over so that very quickly I can determine what stocks have high CIs. To sort by it, simply click on CI. Bingo. We're now looking at over the 8,300 stocks, which stocks have the biggest CI or highest CI. He only wants to look at CIs greater than 1.5. Notice that all of these are. So let's now graph all of these, the top 20. And I can look at carrier group, look at that. And for this, because it's just price performance, I'm going to take earnings per share off. I want to look at the smoothest graphs from the bottom left to the top right. CI can bring these stocks right to the top of the list for you. Here's ACUIF. We've only started tracking it since 8/12 of 2020, but look at the stock's price go. Wow, CLET or limited, C limited. Look at that. Ran, pulled back, but now look at this. And again, to protect yourselves against pullbacks on any of the stocks, use stops. But look at the pullback and look how quickly the stock reverses. Look at the pullback, look how quick. And it does it over and over and over again. High CI stocks are resilient enough to not be caught up in big pullbacks. Let's keep on looking down the list. ARKG, look at the bottom left, top right. Now, again, you want to find the smoothest patterns possible as we continue to look. JD.com, look at that move on the stock. So high CI, I strictly just want to look at price movement. All right, let's go to a couple of other tactics that Dr. Dealer likes. Let's go look at sorting by dollar change. He does this to see what's going on with the big boys. So let's go back into the software to look for the big boy movement. Let's click on dollar change. You're going to find the big boys. So the good thing about this is indices. If I really want to see what indices are moving up the most, like the Dow, the NASDAQ, the S&P, if they're moving up, I can see at a click of a mouse which indices are moving up the most. How about Google's up over 1% today, up $23. So the biggest mover happens to be the Dow Jones total, up $360 today, which equates out to a move of about 1%. But I can look at any given time to see what's going on with the big boys and see what to do. All right, so that's another way to go. Let's go back into the slides. Speaking of big moves, the next thing I'll do is sort by percent price change. Now, this is the flip side to doing this on a database of over 8,300 stocks. In this case, I'll be looking at very low price stocks with the largest percent price changes. Most of these stocks are what? Pretty awful. So, I'll only look at buy-rated stocks. This sort here by percent price change is a really good aggressive sort for those people who are trading. All right, a lot of times in our jockey club room, which is our trading room, we will sort our stocks by percent price change to get a feel of what stocks are popping right then and there and take advantage of them. Today, we did that with a stock. We made 13% in a matter of about 15 minutes or so trading in our trading room, the Jockey Club. So that comes out very well for those people who are more aggressive traders throughout the day. Let's go back into the software. Let's sort the whole database by percent price change, so the stocks that have gone up the most today. All right, how about MJ Harvest up 266% today, but look at the price. Dr. DeLito said that it was low dollar stocks that are moving up. Now, if I'm a trader and I can get some of that, go for it. But what he also likes to do is to look at the stocks that have buy recommendations and hone in on those specifically to take a look at. The choice is yours. If you want to rock and roll and find these stocks that are moving, how about running this at the market open to see what stocks are really starting to take over? In the Unisearch tool, we have a search called percent price change boomers or winners. You can run with that. It's a great way, but from the stock viewer, this is a great way for the aggressive trader to take advantage of the stocks that are moving up the most today. But you can hone in on just the buy recommendations. If you really want to feel froggy and jump a little earlier, you can catch some of these moves. So it is more of an aggressive way to make money. Let's go look at one last thing. Next, I'll sort by DY or dividend yield. Now, he says, I do love this sort, but he put another statement in here. Managing this trade is not as easy as it sounds, so be careful if you want to try it. Let's go into the database. Let's sort by dividend yield. Let's go find it. We'll move over a little bit. And just to let you know, folks, you can sort on any of these indicators. What I'm concentrating on are some of the indicators that Dr. DeLito himself likes to look at when trying to find his what to buy. I'm going to sort by dividend yields. So the stocks that have the highest paying dividend yields will be brought to the top of the list. Let's move this back over. A moment. There we go. Whoops. There we go. Dividend yield. These are big yields, but also take a look at the dividends that are being paid out as well. Look at the other data about these stocks as well. So what I would really like you to do if you're going to look at dividend yield, look at also dividend safety. So the stocks pay a good dividend yield, but let's make sure that the dividend safety is above the value of 1, helping to make sure that the stock's dividend being paid should continue or rise. So dividend yield is a tricky way to go. If you look at some of these stocks, it is a tricky way to go. But Dr. DeLito, from that statement, a good way to help you with that is to also use another indicator, also found only in VectorVest, of dividend safety on a scale between 0 and 99. Above 50 are stocks that will continue or should continue to pay the dividend at the current rate or rise in dividend. Folks, those are great ways, simple ways, to use the stock viewer to help you with your want to buy. As you look at these graphs, it is a cherry-picking tool. Only use or choose the stocks that you're comfortable with. The data, now information is given to you to help you to make a decision, because VectorVest is all about helping you to make smarter decisions, faster decisions in what you do. So with that being said, folks, thank you for joining me for this evening's presentation. Ideally suited for brand new subscribers to the software, but you know something? I think some of our existing customers can use these practices to help them to find stocks as well. So with that, have a great evening, folks.